Imagine waking up one day and the cost of borrowing money suddenly becomes cheaper. Business starts spending, loans become easier to get, and investors, they start paying close attention. Well, that's exactly what happened in Jamaica. The Bank of Jamaica lowered its benchmark policy rate to 5.5%. But the real question is, what does that mean for you, your money, and your investments? Welcome to another episode of Silk Capital Notes, where we talk about all things finance and help you to build sustainable wealth.
Silk Capital. Silk Capital. Silk Capital.
First things first, what is policy rate? Think of policy rate as the price of money for banks. It's a rate that a central bank sets that influences loan interest rates, mortgage rates, business borrowing costs, and even influences investment decision. So when the BOJ lowers this rate, it's simply saying, let's make money cheaper so that the economy can move faster. So what does the 5.5% rate means for the economy? When rates go down, a few important things start happening. The cost of borrowing becomes cheaper. As a result, banks may lower their lending rates. So that means business loan rates become cheaper, mortgage rates decline, and there's easier access to credit. When rates goes down, a few important things start happening. The cost of borrowing becomes cheaper. As a result, bank lending rates may decline. So that simply means mortgage rates becomes cheaper, business loans become cheaper, and there's easier access to credit. As a result, businesses may expand, hire new workers, or even work on new projects. More activity equals economic growth. Point number two, spending increases. So when the cost of borrowing falls, people become more comfortable spending. Yes, so they may just buy that new car, renovate their home, or even start a business. More spending equals more money circulating in the economy. Point number three, investors start moving their money. Yes, when there's a decline in rates, investors will start to seek out higher returns. So that simply means that there's a higher interest in stocks, more investment in businesses, and an increase in activity in the financial market. So in simple terms, money will start to chase opportunity. Now let's talk about the part that matters the most, your wallet. Yes. So if you have loans, this could be good news because that simply means lower loan rates, easier access to refinancing, and easier credit access, especially for mortgages and personal loans. But if you are a saver, that's where the trouble comes in, especially if you rely heavily on the interest rates on savings account. A rate cut simply means that your money will start growing slower. What does smart investors do during rate cuts? Well, smart investors will start thinking differently when rates fall. Instead of keeping their monies in low yield savings accounts, they start looking into other options such as stocks, mutual funds, real estate, businesses, and an overall diversified portfolio. Because historically, lower rates will boost investment markets. Why would the BOJ cut interest rates? The central bank does not just cut rates randomly. Whenever the BOJ lowers interest rates, it's usually to stimulate economic growth, encourage borrowing and spending, support businesses, and also encourage economic stability. Lower rates equal economic encouragement. So next time you hear that the policy rate dropped, remember this. It's not just an economic jargon. It influences how investors earn, how fast businesses grow, loan rates, and ultimately the entire flow of money throughout the economy. If you want more simple breakdown of finance, investing, and wealth building, make sure you comment, like, share, and subscribe. Hit that notification bell below so when we drop a new video, you'll be sure to get notified. And remember, understanding money is the first step to building wealth. See you again. Bye.
Silk capital. Silk capital.